Hey, welcome in, welcome in. We're just getting started up here. Let's see, Maddie, whiskey and ribs. That's what I'm talking about. What's going on? So today, guys, what I'm wanting to do, this is the first time I've done this since launching this channel. I usually do some sort of back testing or kind of week prep on Sundays. And today I am just gonna hit the stream button and let anybody that wants to be a part of it be a part of it. So what I the problem that I'm having right now is back in early 2025. Let's see, back in early 2025, I when I really found my consistency and profitability in my trading. I had all of my stuff, basically all of my entry, all of my different entry criterias, because my strategy is really one strategy, but there are multiple ways that that strategy can play out in the live market, right? So inside my TradeZilla, essentially, I don't just say, "Hey, I trade an inverse fair value gap. That's my strategy," and then I just track my win rate off of that. That to me is not enough. Okay. So what I essentially do is I set up each specific time or setup that I want to take an inverse fair value gap entry off of, and I set each of those as a separate strategy in TradeZilla. So each time I'm taking a trade and I'm going back and doing my journal, I'm going into TradeZilla and I'm linking that specific trade, win or loss, to that specific strategy. And that strategy is very specific. Okay. So I'm going to give you kind of what mine are today and what I will be using during the stream inside my back testing and why I'm doing this today. Okay. So I had a bunch of data all through 2025 when really my first big profitable year, all through 2026, right? But my trading today is we all kind of evolve over time, right? There are strategies and setups in my TradeZilla strategies that I've set up that I don't use anymore, that I don't even look at. So I have a problem with my data being, in my opinion, kind of inaccurate because a lot of the setups and a lot of the trades that data tracks aren't really relevant to me today, August 16th, 2026. So for today, I'm going to go through what my strategies are, what I have in my TradeZilla um, starting today. And I'm basically just trying to not start my data over, but to begin to track from today as a separate data point, and then still have the grand total data point. That makes sense. So kind of branching off um, to just to fine tune my data, man. So let me get my um, I'm gonna get my little highlighter here. So basically, I'm going to go through what my strategies are. These are what I'm using on a day-to-day basis in the market. And ideally, I don't take anything else that isn't one of these. So my first one I have listed as the 930 Judas. Okay. And for that strategy, what I essentially want to see is if I have it doesn't really matter what Asia and London look like. Something like this, live visibility restricted here, recommended. Hold on one second, guys. Because it contains unoriginal reproduced content. This is a line. and restricted in search results which contains unoriginal reproduced content. Appeal. That's not true. This is 100% new content. I don't know what that means. Our live does not contain the content mentioned in the notice. So I want to see some sort of buildup of liquidity prior to the 9:30 open. And then I want to see the 9:30 open bring in manipulation in the opposite way of, a nice draw on liquidity up here, whether it's previous day high, relative equal highs, 4-hour swing high. Obviously, it can be a short too, but I want to see 9:30 manipulate clearly. I want it to sweep some sort of liquidity in Asia or London or previous day, something like that, and then tap at least a 15-minute FEG or higher. So it can be a 15, a 30, an hour, obviously a 4-hour. And I'm calling that my 9:30 Judas. Okay. Second strat. I'm keeping this very brief because I want to actually get into the back testing, but I do want everybody to kind of understand what I'm using. Welcome in, guys. All right. The second strategy I have listed. Why did that? The second strategy. So number one, I don't know why that deleted. So that's our 9:30 Judas. Number two is the 10 a.m. H4 manipulation. All right. So what does that mean? 10 a.m. H4 open continuation. Okay. That means when the 4-hour opens at 10 a.m., I want to see that open in the opposite direction. So if I have draws on liquidity higher, let's say I have relative equal highs, and say right here we open and this is 10 a.m. This is 10. What I'm essentially saying with this strategy is, say I have like a 1-hour FEG down here. I want to see 10 a.m. Let's see if I can get a different color here. And I want to see 10 a.m. open here and then give me manipulation in the opposite direction of the way that I want to trade into a POI, and then look for my IFEG off of that leg, and then look for a continuation trade up into these highs. Okay. 10 a.m. H4 manipulation continuation. Continuation is just saying that the higher time, I'm going in line with the higher time frame trend. This was already an uptrend, and I'm simply just looking for it to continue. The other one is very similar to this, or the next one is very similar to this. There's only 6 of them, so we're basically halfway done. So number 3 is basically the same thing as number 2, except it's not a continuation, it is a sweep. So same exact thing. I want to see if the 10 a.m. open of the 4-hour candle gives me a good sweep of liquidity. That could be the previous 4-hour low, obviously previous day low, relative equal lows, hourly lows, anything like any kind of liquidity target that I have marked on my chart. If I see the 10 a.m. open and sweep that, then that would trigger me to get in the opposite direction. So the difference in between these two is number 2 may not sweep liquidity. I'm just looking for it to pull back down into an FEG or some kind of point of interest off the 10 a.m. open, and then look for it to turn and rip, right? All right, now number 4 and 5 are actually basically copy and paste of that, but instead of the H4, I'm using the 11 a.m. 1-hour candle in the same exact way. Why is this important? because in my opinion, we all have had problems with aligning our entry, which is price action, to time. Okay. If you don't align your entry to time, whether that's using your ICT the macros or some other form of association to time, then a lot of the times your timing, your target could be correct, but your timing may be wrong, which we've all had those times where we've gotten stopped and then it ripped right to where we were targeting. That isn't you being technically wrong. It means you mistimed the move. Okay. And all of are ways in which that I like to link the move to time, price action to time, and I like to line them up because basically number 2 through 5 here is all me trying to see the manipulation off of a 4 hour or a 1 hour candle open and me getting into my position on the manipulation side or the opposite wick of the way that the candle's actually going to expand, because that is helping me align my entry to time. So we have the 10 a.m. 4 hour. I can play continuations off of that manipulation or it manipulating into an actual liquidity sweep. Same thing off the 11 a.m. 1 hour candle. So I can play it manipulation where it opens, pulls back into an FEG or order block or breaker block, whatever it may be, and look for higher in that example. Or I can look, or if it truly sweeps liquidity at that time. So why is it important to get this? People call it granular, meaning you're really zooming in on the details to break down, because everybody else on the internet, and this is where you have to really I really want to drive this point home to everyone on here, is everyone else on the internet would call what I'm trading and they would say his strategy is an IFEG. And that's true. I do use IFEGs to enter the trade, right? But I need to be tracking my data to each one of these setups that trigger me to start looking for my IFEG entry to then get involved. I need to break all of these up as data points so that I know, hey, when I get a 930 Judas and it sets up, I know that I got a 71% win rate on that. I know that maybe I can go in a little heavier because it's been hitting a lot lately. The last 3 months, maybe I'm at 78%. I don't know. I'm just throwing numbers out there, but you start seeing those things. How has this performed over the last year? How has this performed over the last month? And that is how, in my opinion, really big traders that go in heavy at times and make, good money in this know when should I size in, when should I, put half risk on, um, those types of things. And then number 6 is kind of like the classic IFEG that, you would see 90 whatever percent of ICT traders be looking for, where you get some kind of high time frame. You get some sweep of liquidity that then taps a high time frame FEG order block, whatever, and then you look for a reversal. Now, this, in my opinion, this one's hard because this is really my only strategy that is a true reversal. The 930 Jude, all of these are going against me when I take the trade. They all are going opposite of the way that I want to trade. So on the very low time frame, it is technically a reversal. But in the 15-minute, 1 hour, anything above those, I'm trading with the trend with these. This one can be a little tricky because you can at times have this set up and it be a true reversal of what the high time frame trend is. So just keep that in mind. So these are my data points that I have in my TradeZella. So every single trade that I take should be setting up off of one of these 6 setups. And then, of course, once these set up, then I look for the classic, what's my um, highest time frame IFEG on that leg, that manipulation leg, look for that to inverse, and then take the trade to the draw on liquidity. Okay. So everything else is what everyone else is doing is okay, guys. But I need everyone to really freaking understand this, that if I just say, hey, I'm an IFEG trader and that is my strategy, and every single trade, I just have one big bucket of on my journal that's saying, hey, I won today, I won this day, I lost this day, I won this day. Here's a picture of the trade that I lost, or here's the picture of the trade I won. Bro, that is not enough. It's not enough because you're not really truly breaking down like which one of these that actually are getting you into the market, what is your win rate with each of them? Okay. Because as we all know, if you just say I take IFEGs to enter, I mean, I could find an IFEG almost at every freaking second of the New York AM on one time frame or another, right? I mean, you can find them all over the place. So you in your mind, and I'm not trying to sell anyone on like, hey, come do exactly what I'm doing. I'm just saying in your mind, you need to really pinpoint when am I choosing to actually press the button, buy or sell? What is actually getting me into the market? And you need to give them actual names, bro. Give them actual names. It doesn't have to be anything fancy. It doesn't have to be anything, too crazy. It's really just for you. Something that makes you recognize that's what that is. That's all you need. And then you can start breaking it up. Okay. Because if again, I'm going to say it one last time, and then I'm going to get into my back testing. So here are my 6 setups that I will take an IFEG entry off of, targeting a draw on liquidity. I need a draw on liquidity that I believe in on the higher time frame to even get into these steps. This is like step 2. Okay. I need a good draw on liquidity. Then once I see that and I see my general direction that I see price wanting to move, then I start to look for one of these 6 setups. Okay. Just because I enter off of IFEGs does not mean that my strategy is just IFEG. And when I trade and I do my journaling, that I need to put all of my trades into one big bucket and call it my IFEG strategy. Bro, it's just not enough. You need to be breaking down in your own words, nothing fancy. What are the actual setups where I'm pressing buy and sell in the market and using the IFEG or whatever to get my entry from? What is actually triggering me to say, yes, I want to get involved in it? You need to break each one of those up. It doesn't have to be on TradeZella. It can be wherever you're comfortable doing it. And you need to start tracking them separately. You can still track your overall win rate. That's totally fine. I do that too. But you need to know, like, hey, when I see the 10 a.m. 4-hour candle manipulate and sweep the previous 4-hour low, or sweep the London low off of the open of the 4-hour candle, I know that I have for example, a 68% win rate. I do really well on that trade. Maybe I need to take this trade, right? If I just say, hey, I trade IFEGs and I have a 62% win rate, bro, that's not enough. It's not enough. If you really want to take this serious, if you really want to get to the next level, this right here, guys, I'm giving you every bit of sauce that no one else is going to give you. This is what got me to the next level. My data, period. I've known how to trade for probably since 2023. I started in 2020. I was pretty good at trading in 2023, but I wasn't profitable yet. When I really broke down my data and understood, hey, what is actually helping me get to profitability? What am I consistent with? What's giving me good results? When I got a better understanding of that, then things started to change for me. Okay. There is no Fortune 500 company. If you want to be a big trader, you got to look at your business, your trading business, as just like a Fortune 500 company, right? They got accountants, they got different managers and all that to deal with the day to day of their finances, man. So and their data, what's working, what's not working, etc. All right, I'm off my soapbox. I hope everybody's doing well today. I am essentially going to just kick off, just a normal back testing session. I'm using TradeZilla. I would like for anyone that's wanting to practice, wanting to kind of dial in their own trading, to jump on the chart. I will go ahead and put a text box up here, maybe next to the strategies that I'm going to be utilizing. So I'm starting this on May 4, 2026. Okay. I'm only going to be trading NYAM for this back testing purpose. I'm only going to be testing New York AM. Okay. Yeah, that's pretty much it. So this is where I'm starting. Oh, and I'm starting on a 50K. All right. So make sure you guys can see. Can I anchor this thing? All right. Let's talking about money runs the world. Appreciate it, man. Honestly, bro, like I just lost doing this for a while, and I started thinking that, like, man, I really don't even it's bad. Like in 2022, 2023, I was getting more knowledgeable of trading, and I knew all the different strategies, and I knew, like, I understood the market. I had all that, but I could not really put my thumb on why I wasn't profitable. And I think when people get to that point where they know what they're talking about, but they haven't gotten to profitability yet, I think, in my opinion, it's one of two things. It's either your psychology, like that aspect of it, like you're just blowing yourself up, or you don't have confidence in your trading plan. And I think those kind of go hand in hand, like, because if you don't have confidence in your trading plan, then your psychology is going to be in the trash, right? So I think the data really helped me, because, like, now I know without a shadow of a doubt, like, all right, when I see the 10 a.m. 4-hour candle open and sweep the low of the last 4-hour candle, I know that everyone else, that's a London low sweep, because the last 4-hour candle is during London session. So more than likely, I'm sweeping London low off that. Like, I know my win rate is extremely high off of that trade. Okay. That gives me confidence. When I take a loss on that setup, I understand that I'm just dealing with the other side of the probability, right? Like, and that helps me not blow up and start, like, trying to, make it back and do all that, because it just helped me to know, like, hey, even if I have a 72% win rate with this setup, I'm gonna lose 30% of the time. It's just that's the math, right? Like, it allowed me to be more accepting of the loss, because I knew, I had confidence in what I was doing. When I didn't have confidence in my numbers, my win rate, all those things, when I didn't have confidence in it, it was hard for me to be accepting of losses personally. And last thing, I also think that there is this part of it where new traders come in and you start trading, this way, right? And then as soon as you start adapting and you start learning and you start improving, and you kind of change the way you trade, and then you keep doing that over and over again, not even really strategy hopping, but that adds into it too. But then the problem is all that data that you've collected, if you've been journaling very, very good, all the data that you've collected is kind of misleading because half of it is strategies that you may not even trade anymore, right? Because when you were new, you started trading trend lines when you were a rookie, right? And now you've adapted into SMC. Like all your trend line data, that's basically pointless. So then your data is all over the place. It's really hard for new traders in that aspect. So what really clicked for me is when I found the strategy and I understood it enough and I was comfortable with it enough and I really subscribed, meaning I bought into understanding the market in that way. Once I had that and I knew that I could be successful with that and I truly felt that, I threw everything else away and I started my data from scratch and doing this that type of thing in late 2024. um I think like quarter 4 of 2024 is when I first did it like this, and I started my data completely over. That's when, I started kind of um, gain headway. So I appreciate it, man. So anybody that wants to jump on your trading view, jump on your TradeZella, whatever. I like using TradeZella. This is what I essentially do. Once I'll take a trade, you can come up into the top right corner of your TradeZella and essentially put that trade, win or loss or break even, in under a specific strategy. Okay, so each one of these strategies are inside of it. So I'll be tagging each trade with one of these strategies. And what that's going to help me do is give me that, um, you know, a fresh pool of data. I do think that I am very quickly going to see. Where is my? Give me 2 seconds, guys. I'm gonna drag this over just a bit. Cool. All right, we're locked in. Let's roll. All right, so anyone watching on Kick or Twitch, you are seeing the side by side full screen layout. ES is on the left. NQ will be on the right. I will be trading off of uh, the micro charts. Anyone that's usually with me on live stream during the week, I do usually do my charting on the full screen or the full size contract chart and then swap to the micro to enter a trade. Just because there is some small discretions between the charts at times, especially during contract rollovers and things like that. But for this, I'm just going to be on the micro chart, um, doing my thing. All right. So we are on May 4th. That is a Monday in the market. I'm usually not too aggressive on Mondays, but part of trading is holding, kind of sitting on your hands on days that aren't as good. So let's look. Let's start with our daily charts. I already have this day kind of marked up, but let's go ahead and go back through it. The big difference is no, it's a weekly chart. Sorry. Get our weekly charts up. I don't spend a ton of time on the weekly chart, very quick. Big difference is we have essentially so this is our fresh day here, or fresh week, Monday the 4th. We have came up and made that relative equals there. Here, let's. Okay, there we go. Take all the makeup, as ICT called it, off the thing for a second. So big SMT at the highs on the 4 hour or on the weekly chart. Definitely sticking out to us. ES did not take previous week high, but NQ did. Very bullish other than that. All right, drop into the 1 day. We have daily FEGs down in here. And that is also overlapping our daily equilibrium. Our daily dealing range is equilibrium. So let's put that on daily bullish fair value gap there. And then how I'm marking my equilibrium is simply just with the Gantt box, just with the 50% mark, 50% on it. So swing high up here, swing low here, and that is putting my equilibrium here, which is then overlapping my daily bullish fair value gap. Okay. And then anyone that's on Kick or Twitch that can see the ES chart, you can see we have our daily bullish fair value gap made off of the same candle, which anyone that's watched me trade before, that is a big deal to me. I want to usually, if all possible, I want to use fair value gaps or any really point of interest that both the indices made off the same candle. Okay, so same thing here: swing high, swing low, consecutive up close candles, calling out my dealing range. Here's your 50%. You can see ES has now pulled back down in right to the 50% on the daily chart. And then you can see here that you have now on this last 4 hour candle left a very big wick to the downside. Okay, so it wicked right down into our daily equilibrium, and it has gotten a nice top. Okay, NQ on the other hand has not entered its daily fair value gap. Okay, so and it is not rebalanced into equilibrium. Now, what is that telling me? Going down to the 4 hour chart now. Okay, and now everybody, I mark the higher time frame FEGs with lines, so you can see right here daily FEGs there. So we did not pull back into this daily fair value gap or our equilibrium on NQ. That is telling me that we are more bullish on this chart. Okay. ES is running slightly more bearish. And if I get long setups on this chart this day, I would more than likely lean towards NQ. Okay. All right. So, and then the other interesting thing, now that I'm seeing it, so right here is our Friday 6 a.m. low. Okay. We actually have a bullish SMT there. So it looks to be furthering that bias that NQ is the stronger index. ES has swept previous day low, but NQ has not. Okay. So we'll put that on there. And then now we're on the 4 hour chart. I see my eyes do go here to this 4 hour fair value gap. So that's going to be here. And then I also, for the lower time frames, when I you won't see this box on the lower time frames, but I will have these lines to mark the daily and 4 hour FEGs. Okay, and then on ES, we have basically 4 hours stacked on top of each other, but it looks like this one is the lower one that it's truly bouncing out of. Okay. All right. So now I think that's all that we really wanted from those time frames. All right, so now down to the 1 hour chart. All right, what do we notice here? Are these still? In 2 seconds, guys. I just don't want a bunch of stuff all over the screen here. I'm going to save this as I'm going to do that ES chart as well. There we go. All right, cleaned it up a bit. So now on the 1 hour chart, we obviously have a very noticeable and giant SMT at the lows. That is what I would deem our London low. Get the NQ chart to 1 hour here. I'm going to take this off the chart. We got this line right here showing the 4 hour. The line, if the line is dotted, that means we have swept. If the line is solid, that means we have not swept or tapped or whatever. It has not been touched. Okay. So we tapped the 4 hour and now we have displaced bullishly out of that. Okay. So guys, when you see, for me, when I see the daily candle, let's see the 12 Sunday, 6 p.m. Yeah. Okay. So we sat in this range, big displacement down. We tapped on ES 4 hour and daily bullish fair value gap off of this wick. Sweeping previous day low. NQ did not sweep. We got us an SMT. We're deeming this to be our Asia low, our London low. Sorry. We have successfully swept New York AM. If you wanted to consider, you could even consider your Asia low to be right here. We swept that out. The big push down, big sweep on liquidity. All of that looks great to me for higher prices. So now where my brain goes is to look at, the leg that we're currently on this 1 hour chart, only because the 4 hour really isn't giving me there. I mean, you really don't have anything here to work with. Okay. You have this 4 hour FEG, that's great. And you understand that, and you understand why this thing is now leaving this huge wick and bouncing. That's all great. But to go deeper than that, you really can't get it off that 4 hour chart. I don't like to go down in time frame for no reason, I guess is my point. Okay. So now I'm down to the 1 hour. To me, I like this because both ES and NQ have the same 1 hour FEG off the same candle, this bearish FEG. I'm also looking at my equilibrium, which are slightly different between the two, but they're showing me the same thing. So last up close candle on NQ is here. Down to this low, here's my 50%. Okay. So what is that telling me? ES has a slightly different high, but obviously that same low is what I'm using, and its current price is above equilibrium of that 1 hour dealing range. What is that telling me? Okay. What that's telling me is we have now swept liquidity out. We have tapped very high time frame FEGs, about as high a time frame as we look at as intraday traders. And now on our counter trend leg, meaning here to here, we are now above equilibrium, but we are also holding it. You see these wicks going through it, but then it's popping back up, right? That to me looks very bullish. And then that also makes this 1 hour right here our premium array, PD array, because it is above the equilibrium. So any bearish PD array above your equilibrium, you would consider to be your premium PD array. Okay, those are your highest probability. If you're going to get this move where it's going to keep going, more than likely it's going to happen in the premium of the range. Okay, because that's where the big institutions want to get short from. Okay, they want to get short from above equilibrium and they want to buy from underneath equilibrium. Okay, so that to me makes this very, very nice. This hourly FEG here. Okay. Now, ideally, your trade, just looking at this from a very simplistic form, you could, wait for IFEG here on the 1 hour and then go and target your London high. This is your all-time high. When we make this, oh, I'm sorry. This was looking kind of okay. This is actually your London or Asia high is what's at the top there. Let me do that. Put it on top. There we go. So we got Asia high at this wick here, and then your London high. Okay. So we got two nice draws on liquidity higher. ES is slightly different, and you even have honestly an even better draw on liquidity, which is your previous week high still open on ES. Okay. So let's understand the SMT that we have. This SMT at the high, at the previous week high. ES didn't sweep. ES did. That SMT, I would not be scared here to long. Why? Because this SMT has already influenced bearish prices. So for me, this SMT has already played out. Not guaranteed. Of course, this could sit here and hold for higher and higher time frames to have that SMT on the chart, right? It's not an exact science, but for me, once I see this and then I see the big sell-off happen and then the bulls catch and start pulling it back up, and I'm getting all these other confluences holding above equilibrium, respecting daily and 4-hour FEGs. Once I start getting those other confluences, this SMT here worries me less and less. Okay. Now that's just me personally. All right. So now we are at the 9:30 open. Let's do. Yeah. All right. So there would be our 9:30 candle. The last thing that I would want to do prior to open is my midnight opening range. Okay. This is not something I created. Nothing that I do is anything I created other than, in my opinion, a way you should be journaling and tracking your data. I'm an engineer by education, so my data and all that is kind of second nature to me. So we're gonna call this 12:30. So midnight opening range is 12 to 12:30. Okay, this is a institutional buying and selling level, or you could just say transactional level in the market. Let me change it to a different color. I do want to make it a little less bright, something like that. So 12:30 opening, 12 to 12:30 midnight opening range. What I use this for, this has absolutely nothing to do with me entering the market or exiting the market, anything like that. What I'm using this for is solely kind of think of it as like the cherry on top of the sundae. Okay. This is not the brownie. This is not the ice cream. This is solely just to use as an extra confluence on top of your already stacked list of confluence. Okay. Usually, usually in theory, if you were going to have a bullish expanding day, you would see very little opportunity to buy underneath the midnight opening range or inside of that range. Okay. If it's going to expand to the downside that day, you would expect very little opportunity to sell above that range. Okay. So that's how I'm using this. So if I have a bias, if I don't really come into the market with a bias. I do more of scenario style trading. If this, then this, right? But once I have those scenarios, I can use the midnight opening range to kind of help me uh, kind of finalize my idea for it to, and kind of ask myself, does this make sense, right? Like if I'm wanting to be long and I see only, we've only spent a total of 1 hour through Asia, London, and so far New York. We've only spent a combined 1 hour under the midnight opening range. Then that to me is looking pretty freaking good, because 1 hour out of the 14, 15 hours of price action that's since Asia session, that's telling me something nice or higher. Okay. So right now, where are we compared to midnight opening range? Obviously, we're below it. We've formed it, and we've basically, as soon as we formed it, we fell off from it. We did have a very high probability, fair value gaps down here, which makes sense. But I would expect that, if this is going to really truly expand this day, then we're going to get above this 1230 open, and we shouldn't fall back through it really. So you could also maybe study this in a way to manage your trade you're already in, right? Totally up to you. Like I said, this is probably 1% of my total picture of what I'm doing. Okay. But it does sometimes paint the picture very clear. All right, let's get to the fun part. So as I go into this market, I like to look at the 15-minute chart. Okay. I have this 1 hour bearish fair value gap right on top of me. Okay. I've already, honestly, in my opinion, I think we've already swept the key liquidity for the day. Okay. If we're truly going to be bullish today, then this, in my opinion, will probably be the low of the day. Okay. If I start seeing this thing tinker and start falling off with bearish structure, then obviously that's would be my invalidation of that. Okay. Now, as far as my first strategy, let me find that thing up here. And not that one. Thing go. Oh, there it is. All right. So as far as my first strategy, I can already tell you guys that I don't like it for that. For the 930 Judas, I don't like this. Now, some of you may say, which is totally fine. Again, I'm not here to tell anyone to trade exactly like I trade. Some people may look at this. Actually, I mean, it depends on what you look at, guys, honestly. So you could make an argument here for the 930 Judas setup, just looking at it, assuming again that you've already made your low of day here. I usually, for my 930 Judas, I have to at least have a 15-minute FEG, which we do here. And that has definitely been respected. I would like it better if that FEG had not been tapped into at all yet. Okay. And then if I then still had these relative equal lows here open, That would be pretty interesting. Like, we could sweep these lows out, tap the 15 that's unmitigated, and then look for higher prices. That would be pretty interesting. I don't like it as much because, like I said, we've already tapped that gap twice, not even just once. Let's see what the 30's looking like. Pull my Ethernet out. Let's see if this will help speed this thing. Now, the other part of this that I'm going to also be showing you guys today is how I backtest and why it's different than what a lot of people do. Okay. All right. So 30-minute chart doesn't honestly 30-minute doesn't even look as good as a 15 for me. Um, I like the 15 better. So we can also look at the 5, like, is there a fresh 5 down under that 15? Yes. Like, maybe you make the argument like we go and sweep those lows and then tap this 5 and continue higher. Maybe. All right. So let me real quick put my makeup on my ES chart here. So 30-minute here. Now, guys, if you really want to 15-minute, if you really want to improve, okay, there is there's something that I've learned, and honestly a lot of different things that I've done in life about doing things repetitively at speed for practice. Okay, so that when you're doing it for real, you almost feel like the Matrix. Okay, where you can just you're you're able to duck and dodge with ease. Okay. So as I start this, I'm going to take my TradeZella, and you can do this on TradingView as well. I don't want to sync my time frame. Okay, you don't want to do that because that's going to make basically when you hit go on your play button down here, it's going to well, if you're on the 5-minute chart, it's going to start laying 5-minute candles down, which is not what we want. Okay, we want I would say you could pick maybe like 2 seconds or 10 seconds. 10 seconds is pretty freaking fast, and you may have to hit the stop button sometimes, which is totally fine. Uh, okay. So what I want to see, so all of these down here, we have a slight potential for number 1. So we walk through that. Number 6, we've already tapped a very high time frame POI, and we did have multiple liquidity sweeps on that. Okay. So honestly, for me, for number 6, it would be the H1 here goes IFEG, and then I get entry off of that into the London and Asia highs. That would be me playing number 6 out. Playing number 1 out, the my 930 Judas setup would be get the manipulation off of the 930 open, sweep these relative equal lows out. Maybe you tap this 5-minute, and then we get a very nice, 1 or 2 minute IFEG back up. Um, that would be my 930 setup. I do like a fresh fair value gap more than this, though, like where it's already been tapped multiple times. I don't like that as much. And then obviously all my other ones are based on the 4 hour and the 4 hour and the 11 a.m. 1 hour open. So I'm just gonna throw a quick line there. be right here and just say 10 a.m. And I'm going to do one for 11 because once you start, because you guys are about to see this for yourselves, once you start this play button, this thing starts to kind of rip. So any of these times that you have an association to your strategy in, I would recommend you going ahead and putting, making those lines beforehand. And then I would also encourage you to give yourself a hard stop. So for me, hard stop is 12. Okay. Now, if I'm holding a trade through that, as long as I'm break even and shave profits, I will hold runners through 12, but I will not have any risk on the table. Definitely not entering any trades after that point. Oh man, that's ugly. Hold on 2 seconds, guys. Let me out of my way. Text alignment. Hey, okay, bottom. All right. So, guys, again, this is I've obviously, tried to kind of get everyone to understand what my vision or like what my goal of doing this is. But this is the time where you've mapped out your strategy. I hate even saying that they're strategies. They're really not strategies. They're really the better description of them would be my entry. Like, what are my setups that follow my strategy. Your strategy is you want to see liquidity, manipulation, IFEG, draw on liquidity. Like that's your strategy to me. But just bucketing all your trades under that one thing is not good enough. If you really want to understand your data, you need to get a really good breakdown of uh, what your setups are in the market. All right. So every 10 seconds, this thing is going to do some changing. I am going to be switching through time frames um, during this exercise. Anybody, feel free to um, drop any questions or concerns. All right, there we go. All right, 9:30 open. If you find that the 10 seconds is a little too fast for you, then maybe do the 2 second one. All you're basically saying is like 10 seconds is 10x speed. So every 1 second in real time is going to be 10 seconds. I'm sorry. Yeah, you're basically 10x of speed. I think I said that the back wrong way. But you can still change through your time frames live as you're playing these out, which I would encourage everyone to be doing. Honestly, I usually sit on the 5 and 15-minute time frame until I get really close to entry. Okay. Getting a lot of chop. Remember, this is a Monday. If you really want to get even more valid kind of understanding of your trades, you could even go back on Forex Factory to this exact day and see what, if any, news events are happening that day. And then you can even factor that into a layer. Like, what is my CPI win rate? Right? I mean, you can now you don't have to do all of that at once, right? But this is how you can fine tune your data over time. So breaking to the upside, we're at 947 right now. So we would be waiting for that hourly close for anything to the upside right now. We may be looking. What would be nice is if we could get above that bearish 1 hour and then the 10 a.m. 4 hour open manipulates lower, retapping the H1 IFEG. And then we look for entry off of that. That would be nice. So not seeing anything pop off the screen for me. It looks like we're holding, but we're also building up some LR in the on the to the downside. But the 15 gap is holding. We didn't sweep those relative equals out. That would have possibly triggered us into a Judas setup number one, the 930 Judas. Anyone that traded last week, Thursday, was the perfect 930 Judas for me. Market open, manipulated lower into an untapped 15-minute, 1-minute IFEG, and then it exploded like 300 points. Now, not every one of them go 300 points, right? But all right, coming up right here on the hour. All right, here we go. Bam, new hour starting right here. So 930 Judas is out for me. We're 30 minutes in at this point, so no 930 Judas. Number 6 is still kind of playing out. I can kind of almost link number 6 to the number 2. Okay, because because this 10 a.m. open, which is right here where we are, right? I'm not looking really. I mean, we could potentially open and sweep these relative equals right here. Maybe that would be interesting. But we just closed above this 1 out. Okay. How's this? So we need to change. We need to change this to an IFEG. For me, I just turn it. I just turn it gray to make it simple. All right, so now that's an IFEG. ES, on the other hand, has not flipped. Okay, but we could look for what we could look for to potentially to see is off the open, off the 10 a.m. 4 hour open, do we get it to open in the opposite direction, giving us that manipulation wick? And does that tap any key area that we have marked on our chart? Okay. And for me, the best area I see fit for that to happen, and sometimes it's more than one area that could be, but in this case, it's really all I really see is that. Let me double check maybe we don't have a 1 hour gap we formed. Yep, no 1 hour gap. Check the 30. Nope, nothing on the 30. A lot of wicks down there though. 15, no 15 gap formed. Yeah, so for me, just based on the other time frames, not having anything in this leg, this up leg that we're in, that I could see price wanting to manipulate into off of that 4-hour open other than this? I think that this is going to be that for me is going to be the area for me to look at, okay? And why I like that is because that will give me my H4 manipulation continuation trade because we're not doing the sweep off the 10 a.m. The sweep was down here. Here's New York AM. Here's London, or I'm sorry, Asia. We've already done the sweep, and now we're back in an uptrend, and all I'm looking for is continuation. That is why, if you look at my box down here, I have number 2, 10 a.m. H4 manipulation continuation, and 10 a.m. H4 manipulation sweep, meaning off the open, we're sweeping out liquidity. Okay. Honestly, this is setting up better to be number 2. And like I said, we already have number 6, um, present as well, right? We're tapping a daily gap down here. We're tapping a 4-hour gap down here. We've swept a ton of liquidity out. So number 6 is definitely open as well. All right, let's hit the play button, see what we get. 10 a.m. open. We want to see it open opposite of the direction that we want to trade. Okay. I'm going to go down in time frame here. Okay. And then we would look, does it tap? Here comes our tap of that IFEG. All right. Now what happens here is very important. I'm going to miss it. And you can always pull time back, guys. So right there, I don't have an IFEG. Okay. Let's mark just real quick here. This is our 10 a.m. open right here. Okay. Now, I want to keep this as a reference point. In TradingView, I have an indicator that just marks this for me live, without me having to do it. But this to me, this I don't love this because I really don't see a ton of manipulation in this. Okay. Even though it is tapping my POI, if I just accepted this is a little discretionary, I guess, but if I just accepted this, one, I don't have an IFEG. So that's one thing. But if I just accepted that as my manipulation off the 4-hour open, and then I looked for higher prices from that, retap of the 1-hour IFEG, right? That's the first time it got retapped since it closed IFEG. My stop is basically right at a ton of low resistance liquidity built up, right? I really want to see something impulsive here that at least gives me a 1-minute fair value gap that I can look to see it go IFEG. Also, remember, we're not above that 1-hour on ES. Anyone that's not watching in full screen on Kick and Twitch. All right, hitting play again. No 2-minute, no 1-minute. Got a little order block in there, but I don't love that. I'm not really a 1-minute breaker block entry kind of person. I see a ton of LR right here. I want to see it. Somebody get, yeah, there it is. Stop, 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 stop. Okay, that's a manipulation. I like that. All right, so now I'm getting very prime looking at this. Okay, ES though didn't really didn't. That's the 5-minute chart. Hold on, let's look at the 1 minute. Yeah, it took out some lows. All right, so quick look at this 5-minute. So we definitely swept some lows out. Uh, okay. All right, let's see how we react out of it. All right. So we need an IFEG to enter here. That wick is nice though. That's what we want to see. We want to see people get driven out. Now, on this 4 hour, remember guys, this is 4 hours worth of time. Okay. So it doesn't have to manipulate in the first 3 minutes that it's open. Okay. All right. So now we're passing back right up to the 10 a.m. opening price. Okay. I really honestly at this time I like this trade. I just don't really have a good entry for it, unfortunately. Let me make sure. Yeah, 3 minute, nothing. Maybe this is maybe I would have gotten a 30-second inverse, which I'm not a huge fan of, but maybe there's a 30-second in here that would have got me into this trade. But this is the exact strategy that number two is painting. Okay. Now I may not get entry here, and I gotta, you gotta let it go sometimes. So let's see what we get. Our next, if we don't get a pullback, IFEG entry here, our next opportunity would more than likely be at 11. Let's run through this thing quick. There we go. Yep. We get some sort of manipulation back down, like maybe I could take a continuation. Oh man, that was looking freaking prime to me, bro. Check this. Check this. I hope everyone sees the power of aligning yourself, your price action reading, the time. Candles are just a form of time, right? Or I'm sorry, they're just a form of capturing time. Wonder where our equilibrium is. Yeah, it didn't really rebalance. Yeah. Mm. I don't love that trade to be honest, guys. Just because I didn't I don't know. I think this is gonna hit, but this would be a trade I fade in real life. Just because my entry criteria, my last, my last piece of the puzzle isn't there, unfortunately. Okay. But we would be targeting, this is quote TP. Honestly, you could probably target this as TP1, TP2, and TP3. So we can honestly, and guys, this is a good part of doing this, okay? Is when you have something pop up like this where you see it and you're like, dude, this is a good setup that I would have to fade in the live market because I don't have my exact entry. You know, this is the time that you could look and see if you could take it. So off of that, why I love this strategy, guys, is because what do I have right here off that low? That is, in my opinion, the 4 hour candles low. So I can put my stop here and I can have a lot of freaking confidence of where my stop is. If my stop gets ran there, then that's not the low, and the candle's now bearish again and going deeper. I don't want to be in that trade. Does that make sense? I'm aligning price to time. Aligning price to time. That is the whole shebang of this. So that's not quite a 1-to-1 either. So that's honestly not super ideal, I guess would be the word. But maybe you could let this poke through just a bit. I wouldn't let you do any partialing. Maybe if you took it to something like that. All right, we'll see how that plays. That would be a potential trade that's following the strategy, but that doesn't have the IFEG in it. So I would not take that in the live market, but it follows the 10 a.m. manipulation. So the 10 a.m. open retapped the H1 FEG. I'm sorry, it retapped the H1 IFEG. Oh, that looks ugly. I probably would. That's not what you want to see. So if you don't get the inverse fair value gap, in my opinion, you are taking a big risk because usually if you get true manipulation, like displacement, you're going to have at least a 1 minute FEG in that displacement leg. If you don't have the IFEG, why I think that entry criteria works so well for people overall is because it does help you ensure that the manipulation has occurred. See, like right here, if I was to take this trade, you're taking the risk of like, yeah, you did get this big wick down here. You did get definitely some manipulation, which we wanted to see, but it didn't really have a lot of follow through, and it popped pretty quick back up. And it didn't even leave a 1 minute fair value gap. So it obviously didn't displace and dig down into, those quote stop losses and stop orders too terribly much. So unfortunately with this, I would probably have to let this run in the real market because of that. I would be open if we went and potentially went and took the low down here. Honestly, well, yeah, I don't really like this low because it didn't make a higher high. Come on. Yeah. So if we got some manipulation off of what I would consider to be the 4-hour low, that might be interesting to jump back in or to actually jump in a trade. Um, because I want to, again, this is just not the area that we retapped was fine, but the structure didn't give me the IFEG. Let's see if now here it comes. Watch. I thought it was going to give it to us. I thought that this big displacement candle was going to give us the IFEG. But if you enter without the IFEG, you're taking a big risk on that the manipulation hasn't occurred yet. That it's going to want to manipulate more, in my opinion. So we're not really getting displacement. Honestly, if I would have taken this trade, this is not really what I would be wanting to see. Just kind of chopping around. To me, this is building up liquidity on both sides of the market, and it's going to dump it. Maybe off this 11 a.m. open, right? This gray line is our 11 a.m. hourly open, and we can take the same types of setups off of that. So it dug back into the hourly IFEG one more time. Now it's going to make higher highs. Let's check on ES over here. ES is rolling. It has now taken that first swing high on its chart. So ES just took this out. Both are above that now. Getting some nice displacement. So going into this 11 a.m., right? What's our opportunity? Okay. So we have this leg up, right? That's looking great to the upside. If we leave our draws on liquidity open before 11 a.m., then we could look for 11 a.m. to pull back down into something off of this leg and then look for our continuations into those highs still. Okay. That's leaving it. Yep. This was that. Well, it's looking like it's going to leave those highs for a second. We'll see. And remember, we have previous week high way up there on ES. So we got draws higher. Let's check the 15-minute. I would like, maybe we get, look, we're inside that 12 to 1230 range now, projecting right off the middle of it. More than likely looking like we're going to keep us a 15-minute FEG. Let's see, we got about half the candle left. Let's see if we hold these highs. And potentially we could get us an actual entry. Right now, this trade's looking like it's freaking smacking. So no IFEG here. I didn't actually hit the button, but I did want to just see what it would play out to be. Oh, guys, look what it just did. Did anybody see that? Notice that? Look, here's your wick, high wick right here. Look where it just manipulated to. It closed that 15-minute inefficiency off prior to closing the candle. Okay. That to me doesn't look too good for us to get a continuation opportunity. All right. Let it go on this sucker. See what 11 a.m. does. The 11 a.m. candle may not manipulate lower. It may pop higher. Oh. Oh. So it swept that first high. Now you're getting a lot of displacement lower. We're not even at the hourly open yet. Big manipulation. There it is. If you don't have the IFEG entry, guys, you're taking the risk of getting manipulated once you're in the trade. So honestly, to me, I might have gotten a little profit off here, but I would have been break even on that for most of the contracts. So I think overall it's a good fade. All right, so now guys, this is looking good now. Okay. Now, this to you, just looking at NASDAQ's chart, may not look that good. You may say, well, Zax, we've already retapped the H1 IFEG here and made a higher high, right? What I need you all to understand about liquidity is every low and every high in the market is not liquidity. Or, I mean, it technically it is, but a buildup of liquidity. And the way that we use it, I like to watch the liquidity get built up. Okay. I don't even have let me make this real quick. I like to watch liquidity get built up. So for me, I want to see a low that sponsored a higher high get ran. That to me is liquidity getting swept. Okay. I want to see the high and the low get ran. I'm sorry. I want the low that made a new higher high. I want to see that low get ran. That to me is a buildup of liquidity and liquidity getting swept. Okay. Now, I don't just like this because I swept some liquidity right here. Okay. This is it, guys. This is exactly the strategies that I'm telling you guys about, aligning your price action to time. If you're not looking at 10 a.m. open, 11 a.m. open as times that these manipulations occur, because that's when the fresh higher time frame candles occur, then you're just looking at all these wicks getting thrown in price action and saying, why is this sweeping a low right now? Why is this sweep just happening at this exact moment? If you're blind to that, you're going to have a really hard time reading price. Okay. Now, if anyone that's on Kick and Twitch, you're also looking at the ES chart. What did we just do at the 11 a.m. open? We inversed that H1 bearish fair value gap. Actually, did we? Oh man, I think it pulled back in. It sure did. Wow. Never mind. Disregard that. I thought that we inversed that gap and then opened the 11 a.m. and this was just manipulating to retap the H1 IFEG on ES. Interesting. That's a little tricky. So we still have it inversed. We did sweep a high. So you could deem this as a clean liquidity sweep on liquidity. Is this definitely sponsored a what? A lower low. Let me save this so I don't have to keep making them. Let's see. Save that. All right. So we'll mark this as our sweep on liquidity as well. And now we have a new sweep. And this low down here, guys, that we had marked is still holding. So on your chart or on my chart, what I would have here is just like a note saying, is this the H4 low? Question mark. We don't know that, but I'm assuming that if we're going to have a bullish forming candle, that this would hold. Okay. Now we've gotten a big manipulation off of right during the macro. 1050 macro looks to be delivered. Let's check our 15-minute chart here. Kind of peeking at all of the charts. And now we actually have a new high in the market made, that last hourly high right here. That we could aim at potentially as well. All right, going back down 5 minutes. So now I'm looking at this as my manipulation leg. I do have a nice wick off the hourly open. It's still holding my bullish PD array. So I don't hate this. I think. Oh god. Just a second here. Let's see.